Hey everyone, Couch Investor back to another video for today. So, I'm buying more shares of Meta Platform. Obviously, I will talk about the good, the bad, and the opportunity, but also the ugly, because, well, there is one big ugly number out there. Of course, Meta has been the talk of the week. Stock crashed more than 20% after they reported earnings. And to be honest, one thing had to be said during the earnings call. One tiny thing, well, one multi-billion dollar thing should have been said during the earnings call, or could have been said during the earnings call, and all of this would have been prevented. What is that, you ask? Well, they should have just said, we are slowing down our investments for 2023. That's the only thing. That's the only thing they had to say during the earnings call, and their stock would not have crashed 20%. All the rest, if you see all the chatter around the internet and Wall Street probably as well, nobody is actually talking about the business, right? At the monthly active users, the daily active users, WhatsApp, Instagram, Reels, nobody's talking about that. Everybody's talking about the expenses. So, if they would have said that the expenses would have been under control in 2023, the stock would probably be green. Maybe not green, but maybe flat. And so, in this video, I'll try and explain all the scenarios and all the reasoning why I'm adding more to my position. I'm going to start with some things that were mentioned during the earnings call, because those are usually things that not everybody reads. And then at the end, I'll show you a couple of numbers from the earnings report that, well, might be extremely interesting. But before I do so, if you enjoy this type of content and videos, hit that thumbs up button and subscribe if you have not. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couch investor. Make sure to check out all the other links in the pinned comment. All right, so first things first, and I'm trying something out. I'm putting my face on it when I'm reading stuff. Maybe it increases the watch time, I don't know. So first things first, on Facebook specifically, the number of people using the service each day is the highest it's ever been, nearly 2 billion, and engagement trends are strong. Instagram has more than 2 billion monthly actives, WhatsApp has more than 2 billion daily actives, also with the exciting trend that North America is now our fastest growing region. So, to those that are saying that Facebook is dying for the, millionth time already, you are lying, or you're just uninformed, maybe misinformed as well. Maybe we should flag it next time. Then talking about 2023. So in 2023, we are going to focus our investments on a small number of high priority growth areas. So that means that some teams will grow meaningfully, but most other teams will stay flat or shrink over the next year. Hopefully shrink, because a couple of months ago we heard that Zuckerberg said that we could do the same work with less people. So, well, about time you lay some of those off. In aggregate, we expect to end 2023 as either roughly the same size or even a slightly smaller organization than we are today, because today headcount has grown 28% year over year. 28% year over year. So those three of the primary areas that they're going to focus on are obviously AI discovery engine, that's powering Reels and other recommendation experiences, which obviously should be a high priority here. Their ads and business messaging platform, and the future vision of the metaverse, of course. And also impressive numbers with regards to Reels. So there are now more than 140 billion Reels plays across Facebook and Instagram each day. That's a 50% increase from 6 months ago. Reels is incremental to time spent on our ads. So incremental. Reels is not cannibalizing other things on the apps. Very important. The trends look good here, and we believe that we are gaining time spent share on competitors like TikTok. Very interesting. But of course, as we've heard before, the success of Reels is actually cannibalizing, well, the other products that Facebook is offering. So even with the progress they've made, they're still choosing to take a more than $500 million quarterly revenue headwind with this shift, but they expect to get to a more neutral place over the next 10, sort of 12 to 18 months, because, well, Reels is not as monetizable as the OG products that Facebook has offered. We've seen that with Stories as well, but Stories has become a huge success, and seeing how Reels is doing right now, probably that will be a huge success as well, but it just takes time. Last quarter, Instagram Reels had crossed a 1 billion annual revenue run rate. We continue scaling monetization across both Instagram and Facebook, and the combined run rate across these apps is now $3 billion. Pretty promising there. Now, the part that, well, was and still is, in my opinion, under monetized is obviously the messaging app, but that's changing. So they started with click-to-messaging ads, which lets businesses run ads on Facebook and Instagram that start a thread on Messenger, WhatsApp, or Instagram Direct. So they can communicate with customers directly, and this is one of their fastest growing ads products with a $9 billion annual run rate. And this revenue is mostly on click-to-Messenger today, since we started there first, but click-to-WhatsApp just passed a $1.5 billion run rate and growing more than 80% year over year. This is also great because this is again inside their own ecosystem, which means they control, well, most of it. So if anything changes again, Apple wink wink, well, this should affect them less. And here comes the big issue that was mentioned during the earnings call. So they anticipate their full year 2023 total expenses will be in the range of $96 to $101 billion. This includes an estimated $2 billion in charges related to consolidating their office facility footprint. If you think of it, it's, well, more than 1/3 the company's market value today. So where does that money go to? So the growth in 2023 OPEX is primarily driven by headcount-related costs from employees that they've already hired through 2022. And those hires have primarily been concentrated in technical and more senior roles. So they expect the slowdown in payroll growth in 2023 will be the result of the slowdown in headcount growth overall. But still, they should have mentioned a slowdown in spending overall and maybe a big one as well. And last thing with regards to the earnings call, and that's something I also want to mention afterwards from something I read in this book right here. Maybe you can't see, maybe you can. Invent and Wander, the collected writings of Jeff Bezos. I highly suggest you go and buy this book. Very, very insightful. So in there, obviously, we all know the day one aspect of Jeff Bezos' vision. So when Amazon went from $106 after the dot-com bubble to $6, obviously everybody was laughing. I will read a couple of quotes here. So Amazon, its stock was $106 a share in December 1999 when the Person of the Year issue came out. A month later, it was down 40%. Within 2 years, it had fallen to as low as $6 per share. Journalists and stock analysts ridiculed it, dubbing the company Amazon.toast and Amazon.bomb. In the annual shareholder letter, Jeff Bezos, right after that, with a one-word sentence, ouch. Bezos succeeded by keeping his eye on the long game, foregoing profits for growth, and being relentless and sometimes ruthless with competitors and even his own colleagues. At one point during the dot-com meltdown, he and a few other internet entrepreneurs were on an NBC nightly news special with Tom Brokaw. Mr. Bezos, can you even spell profit? Brokaw asked, highlighting the fact that Amazon was hemorrhaging money as it grew. Sure, Bezos replied, P-R-O-P-H-E-T. And by 2019, Amazon stock would be at $2,000 a share and the company would have $233 billion in revenue and 647,000 employees worldwide. Of course, Amazon back then, every metric of the business was actually doing much, much better, which is not the case right now. Well, not completely the case right now with Meta. So, okay, I hear you. But let's listen to what Mark here has to say, which resembles what Jeff used to say 20 years ago. I mean, look, I get that a lot of people might disagree with this investment, but from what I can tell, I think this is going to be a very important thing. And I think it would be a mistake for us not to focus on any of these areas, which I think are going to be fundamentally important to the future. So, we are going to try to do this in a way that is responsible and matches the way that the rest of the business is growing over time. And I think we have built up the team to a point now where I think we will be able to kind of match that growth with the rest of the business more going forwards. But over time, I think that these are going to end up being very important investments for the future of our business. And I think it's some of the most historic work that we are doing that I think people are going to look back on decades from now and talk about the importance of the work that was done here. Of course, you can disagree with this. You can dislike the person. I mean, it's easy to dislike Mark, just the way it's easy to dislike Jeff Bezos, Elon Musk, and many other people that aren't maybe as normal, let's say, quote unquote, as the rest of the people you encounter in your daily lives. It's completely normal. But I'm giving them, well, I gave them all the benefit of the doubt, and that's why I'm adding also more shares to my position of Meta. Because overall, I do think that the business will be doing much, much better in the future. And right now, if we're talking about their core business, let's have actually a quick look at a couple of numbers. So of course, we have this a complete disaster, right? Operating margins went from Q4 2020 from 46% to 20%. Well, this is largely due to Reality Labs operating loss, which keeps on increasing, and then obviously also Family of Apps operating income decreasing because of, Apple's changes. Fine, we're now basically over that on a year-over-year comparison. So next quarter, Meta should show us some improvement there. But obviously, the ramping up of Reels is also affecting that. So basically, you have a lot of, the timing wasn't great, but everything happens at the same time. So this is why it impacted the business negatively. Again, Meta needs to show shareholders that it can become much better in the future. But overall, as you can see, Facebook daily active users, right? For a lot of people, they still do not understand that the US and Canada, but let's talk about the United States here, is just a tiny portion of the user base of Facebook. This is something that I will repeat every time again and again, because I do feel that the United States, it's a huge echo chamber, because those are usually the ones that complain about everything. We Europeans, sometimes we look at it and we're like, what the heck is going on there? Not that Europe is in a much, much better place, but every time you hear a trend on Twitter or whatever, you should take it with a grain of salt, especially in Facebook's case. They are clearly not the majority. Facebook and all of its apps are extremely popular in the rest of the world, Asia Pacific as well, and Europe is basically 50% bigger than the United States. Now, of course, from a revenue standpoint, US and Canada and Europe are the lucrative markets. Asia Pacific, rest of the world, much, much less. But hey, if you want to grow other countries' economies, if you want to open up those economies, then, that will certainly help. Your presence will certainly help, especially, let's take an example, a country like India. It's projected to be one of the largest economies in the world in the next decade. Now, of course, we have to talk about the metaverse. One thing I'll have to say is that the Meta Quest Pro, from all the reviews that I've seen, it's actually incredible tech. It's going to help the Quest 3 a lot, which is much, much affordable, because the Quest Pro is not really built for you and me. It's basically a dev kit for, developers, game makers, etc. that want to build VR, mixed VR, maybe future AR apps on the platform. And then that will be distributed to a much more affordable headset that is the Quest 3. That's very important because you want as many developers on the platform as early on as possible. Then you obviously have the TikTok aspect. I would be very, very surprised if TikTok does not get banned in the years to come, because, to be honest, it just doesn't make sense, right? TikTok, a Chinese app that, let's face it, is used as a anti-privacy app. I'm not going to use the word spyware. Oh, oops, I just did. but it just doesn't make sense. They can operate in Europe and the United States, but Facebook, Snapchat, and all of those things cannot operate in China. I mean, come on, just doesn't make sense. And so that might be a tailwind as well, not just for Facebook, but for other social media apps as well. But for now, I think risk-reward wise, it makes more sense for me to have money in Meta at today's prices. That's why I added. But of course, I understand the risks. The risks are they never recover. They spend too much money and, well, they're just digging their grave slowly but surely. But to me, after seeing all the numbers, I just don't believe it. Of course, I might be wrong. Of course, I would love to hear your thoughts down in the comments below. This has been a long video, but I do think this is an important topic because you can apply a lot of things from the Facebook story, the business case here, and apply it to other investments as well. So do share your thoughts down in the comments below. Like and subscribe if you have not, and I'll see you all in the next one. Bye-bye.